not
No,
this one.
actually, even Asia is not doing well, barring Korea.
Yeah, but for our market, just as soon as we moved into the green, there was some selling, which obviously came back. But every 7th we celebrate the mutual fund day, and of course, right now we have with us S. Krishna Kumar, CIO Equity at Sundaram Mutual Fund. Krishna, good morning. So you are of course the mid cap mogul. So tell us, with this kind of correction, is your fund saved from the correction? I mean, of course, everything would be impacted, but how are you trying to sort of protect your investors from this kind of fall?
Yeah, I think we're not unduly perturbed by this correction that is happening at this point in time. Given the way the market was behaving towards the last 6 months of the previous year, there were definitely some concerns in different parts of the market segments, be it on the cap side or the sector side. So there's been that's been a kind of a healthy correction that's happened over the last 2 to 3 months, because the correction in mid and small cap started as early as November and December, and they've been slowly kind of drifting off, and the large caps started to kind of give way into February. So I think this is quite healthy, because we've had a good 4-year run, from the lows of the pre-election time, and so with a consistent improvement in the outlook, and we've been talking about the macros, but the micros were not really falling in place. But now, last 6 months, you are seeing that at the ground level things are fairly strong and showing good recovery. While probably the best of the macros are behind us at this point in time. Having said that, so I think we are seeing the economy, get into a higher growth path. The earnings are quite strong and across the board doing well. So we at this point are trying to, basically add into stocks more bottom up, where we see a lot more visibility in terms of growth, runway for the next 2 to 3 years. So rather than a top-down approach at this point in time, I think as we have been discussing the last 6 months, it's more a bottom-up strategy that's kind of working, and that's what we're trying to do. So whatever the cash that we kind of had, we've been judiciously adding to our ideas where we have higher conviction, and that's what we've been doing. And most of our funds have a lower down capture, so we've been able to pull back against the benchmarks, etc., quite nicely in the last 2 to 3 months.
Okay. Good morning, Krishna. So the mid-cap mughals are not fearing a battle of Panipat onslaught on them. That's good to hear. How about fund flows? Are you seeing any difference in investor behavior in terms of putting in money?
Yeah. So if you look at the month of February, which is the most volatile month we have seen for some time, we've had nearly on a run rate basis, we were at about 75 to 80% of the previous month of Jan. For example, if Jan was 1,000 crores, we were at about 750 crores in the month of February. So these are not actual numbers, I'm just giving you a sense. So there has been a slowdown in terms of net new cash, basically. But at the same time, I am also not counting the fact that we have closed NFO in this period of end Feb, early March, which also raised to 200 crore nearly on the small cap side. So I think there are investors who have a fairly matured outlook. So they are kind of giving in money, putting money to work on a 3-5 year basis. So there has been no reduction in the SIP cycle. There's been no termination of SIPs, and there's been some chunky money just come in on bad days like yesterday, day before, etc. So there's been some good money that's coming in also. And as we said, the NFO market, where somebody's come in with a 5-year outlook on a small cap fund, I think that tells you that there is a good appetite for equities with a medium-term perspective in mind. So I think the fact that there is also a rationalization of scheme that's been going through, with SEBI coming down upon the fund houses to kind of put schemes in a different 10 different equity buckets. So that's also been going on, and so there's been somewhat of churning across the funds in terms of guys getting into the new mandate that they have for the funds. So in that sense, so there's been some amount of churn that we are seeing from the secondary market, but broadly I think in the flows are holding up pretty nicely, and when we get the data for February, I think we will have more color in terms of what others have been doing. For us, it's been good, a good month in Feb, and early trends in March also indicate that we are doing better than market share.
Okay, well, yes, you can see it in the stocks that you have in your funds. I wanted to talk a little bit about the NBFC space, because that is one sector that has given you maximum returns as far as your mid-cap funds are concerned. You know, names like Bajaj Finance, Finserv, etc. But now there is a view that the pricing power has moved in favor of banks. We all know that higher rates are also a reality now. Do you think the outperformance of NBFCs could sort of halt, or is this a space that still has a lot more value?
Yeah, so there are different types of NBFCs. So in terms of segments like consumer finance or a commercial vehicle finance, you definitely will see that NBFCs have the kind of reach and penetration to do that, and you also need a different feet on the ground approach to do some of the retail lending, which the banks will not be able to do. So while there will be some pockets in the NBFC space where there's a lot more wholesale, loaning, they would be affected. But you would tend to see that there are definitely spaces where the banks may not be able to penetrate that much. So I think it's a mixed bag in that sense. Having said that, overall, I think with the kind of money market rates kind of moving up in the last 3 months to 6 months, definitely the cost of funds for the NBFCs is definitely moving up, and that is seemingly having a issue in terms of the spreads that these companies can enjoy. These definitely are issues to be worried about. But at the same time, like we discussed last time, the back book is there, which is getting repriced lower. So if you look at a 100 crore loan liability book, while there is a pressure on the upside, but there is 50% of the book which is still at 9% and going down to 7.5%, 8%. So in that sense, so you have a cushion of the back book which will also help you. So overall at this point in time, there is a perception that NBFCs are under pressure, but I think given their penetration and the customer mix, I think some of the good quality ones will continue to do much better than the banks at this point in time. Valuations probably may readjust itself, given that incrementally the outlook is over a period of time will get a little muted from a spread expansion perspective. So it's like more of growth with spreads being maintained at these levels. So that's the way we would look at NBFCs largely.
All right, Krishna, we've run out of time. Thanks a lot for joining us today on the Mutual Fund Day. By the way, just look at the intraday chart of Adani Enterprises. That's the one where you've seen now a significant recovery between yesterday's, of course, low. Yesterday was down quite a bit. Today morning was down quite a bit from the low point. There is quite a bit of rally which we have seen now in Adani Enterprises. We'll take a break, but up next, Mangalam is at the Motilal Oswal headquarters. So he has